Good morning and welcome to the latest episode of Talking Ball. It's the 17th of September. I'm Joe Neighbour from Signal Centre and going to run through the latest headlines and charts for you today. This is the last one, as I said, of the week. Next week, I'll be back with Steve O'Hare, the main man. Until then, let's get this through and wrap up the week. So, latest news from the geopolitical side of things. Yesterday, the US was angry over Australia's surprise decision to abandon its multi-billion-dollar submarine contract with France in favour of US technology. The France foreign minister took aim at President Joe Biden after being blindsided by the pact also involving the UK, which aims to beef up against China. In terms of what's going on with the ECB, they dismissed a report in the Financial Times that said the chief economist Philip Lane discussed with analysts unpublished internal models suggesting the institution expects to reach its 2% inflation target by 2025. The newspaper cited the models as signaling that the ECB is on course to raise interest rates in just over 2 years, and the Bund futures dropped as a result of that report. In China, it says that they've fully vaccinated more than 1 billion people against Covid-19, which is over 70% of its population, and putting it in the lead amongst the world's biggest economies. So obviously good news for them. Clearly, though, there are still worries about the highly infectious Delta variant, which continues to be running a bit out of control in certain places. In terms of markets today, futures are pointing higher. We seem to be in sort of risk on mode by the looks of things at the moment. One thing to point out and traders need to be aware of today is that it's triple witching day, which is when the quarterly expiration of futures and options on the indices and stocks occur. It can be quite volatile. So do be aware if you do see some irregular price activity around sort of mid-morning in the UK. And then later on in the afternoon in the US. So let's get stuck into the charts then. First up, going to start with FX. This is the dollar index chart. Yesterday we saw a really strong move to the upside, pretty much engulfing all the previous days' losses. We are a bit flat today, down by 0.03%, so hardly concerning as it stands. Kind of going against the tide that we're seeing really at the moment with this risk on move. The dollar not really being affected by that at the moment. So we did make a new closing high, sorry, the highest closing high that we've seen since we have to go back to the end of August on that. So looks like it's continuing to trade within this channel. The resistances above that we continue to talk about are 93.43 and 93.73. So let's see how that plays out. So what impact is that having on euro dollar? Well, as you would expect, due to the weakness that we've got today on dollar index, the euro dollar pair is slightly higher today, but again, big sell off yesterday, a little bit of an increase in volume with that as well. Still looks like lower prices are set to persist, and again, looking for these key support levels down at 117.04 and below that at 116.64. So keep an eye on that for now, but the preference remains to sell into strength on euro dollar. Looking at cable, again, sell off yesterday in line with this downtrend, engulfing all of the previous day's gains. So continues to be under a bit of pressure in the very short term. Again, looks like lower prices are set to persist while we remain trapped within this short-term downtrend. In order to reverse that, we need to see a move above the short-term downtrend, and also more importantly to take out this resistance above at 1.3892. Looking at euro sterling. Pretty choppy and flat. We did see a move to the downside yesterday, but a recovery intra-session. We're pushing a little bit higher today. Overall, the trend remains bearish. Yes, we've seen a bit of an uptick today, but I think the sellers are likely to get back involved in that at some stage. So continue to look for lower prices on that. If we look at the riskier assets like Aussie, that's showing signs of potentially ending this selling streak, but it still looks like it's heading lower. We're still within the price range that was set yesterday. Bit of an uptick in volume yesterday on that selling as well, and looks to have engulfed all the previous day's sessions. So although we've had a bit of a bounce today and a bit more of a risk-on environment, it looks like lower prices are going to continue on that front for now. So that's it for the FX side of things. Pretty straightforward. Not much changed. Bitcoin. This is had a decent bounce from these lows down here at 42 at 830. Pushed higher again, a couple of days ago, bit indecision yesterday, and today we're up by 0.25%, but within the price range that was set yesterday. Volumes are declining as well, which I think is probably the main concern here, is that there isn't a huge amount of participation in this at the moment. So it looks like it's in a bit of no man's land, and we need to see a move either way, either above these resistance levels here that we've got between 51,110 to 54,510. If we can get above that, then a move back to the previous highs looks possible. This is the key level to watch on the downside, which is at 42830. If that breaks, then we're looking for a continuation lower on Bitcoin. Looking at some of the commodities, oil has been trading very robustly. It's moving higher. It's broken out of this consolidation channel that it's been trading in, and it looks as though we are pushing higher. Bit of indecision yesterday, maybe a bit of profit being taken out of the trade. We're a bit lower today by almost 0.5%, but in the grand scheme of things, it doesn't look overly concerning. We may see a pullback to retest this support level that we've got at 70.40, but ultimately we are expecting higher prices up to that resistance level at 76.35. Gold. So yesterday that broke down through this support level at 17.58. Big sell-off yesterday as investors shunned gold. Overall, still looks like it's trading in this corrective channel or this bearish channel at the moment. So lower prices can't be ruled out in the very short term, but the sort of bigger picture here, still looking for a break to the upside, and it needs to get above 1834 to 1845 in order to confirm that. So for now, more sideways, choppy price action expected. I think while we're below this support level here, we may even see another retest down to these levels at 1676 to 1657. But ultimately, we are of the opinion that higher prices will be seen on gold in the coming months. But for now, probably going to see more choppy sideways price action. So maybe limited opportunities there with gold at the moment. Looking at silver, that sold off yesterday as well. We've got it trading in a pretty defined range at the minute. So the lower end of the range comes in between sort of 21.66 to 22.20. So while we're kind of in that range, I expect maybe that dip buyers will sort of step in fairly soon in and around this kind of range here. So just sort of cutting through the wicks of the candles and focusing on the closes. So a band of support here, I think, could form. And we may see some dip buyers step back in, although it is important to add that yesterday there was quite a significant uptick in the selling volume accompanying this big red candle. So it remains to be seen whether or not the buyers have the appetite to step back in and push this higher. Okay, onto the indices. So we talked about them being on the front foot today. The FTSE 100 is lagging at the moment. It's down by 0.2%. At the moment, it's a really difficult one to call because it's trapped in this really sort of narrow range between 6992 to 7115. I think this is kind of pivotal. If we get a break to the downside below 6992, then we'll be looking for lower prices. I like the look of this level here. It's the key swing low that we posted on the 19th of July, but also more importantly, in line with this long-term uptrend, which actually started at the height of the pandemic back in March. So could be a really critical test of that trend line if we do get a break of this 6992 level in the short term. On the flip side of that, if it breaks above this blue line that we've got at 7115, then I think we can expect another retest of these previous highs at 7235. And of course, a break above that, then there's a fair amount of blue sky to move into on the upside on the FTSE 100. The other markets, so DAX, yes, it's on the front foot. It's up by 0.3%. Again, it's not the best performing market at the moment in Europe. The CAC and the Euro Stoxx 50 are looking pretty strong today, up by 0.5% each. We do seem to have found some support here at 15,450 on the DAX. So while that remains the case, and while we trade above it, there is absolutely every chance that we get a retest of this previous high at 16,031. But the break of trend is a little bit of a concern and may mean that we see a little bit more consolidation and potentially that could lead to a deeper correction. I've got this blue arrow drawn on because that's down at the sort of 38.2% fib level of this entire move here on the DAX from the March lows. And the move down to there can't be ruled out really over the short to medium term because it would just be a healthy correction in the grand scheme of things, in my opinion. We've done an awful lot on the upside without there being any kind of meaningful correction. But in order to get that correction, maybe we do need some sort of catalyst, which I don't know what that is at the minute. It could be a combination of things. It could be colder weather's returning and coronavirus. We could have obviously rising energy prices biting consumer confidence, and we could have obviously this inflation story and the tapering story continuing to play out as well. So for now, not a lot happening. Not expecting really any massive ranges unless there is any kind of catalyst. So expecting things to remain quite choppy in the short term on DAX. Looking at the US markets quickly, as we know, dip buyers love it in the US. Anytime there's a pullback, the buyers step back in. We did see a bit of weakness intra-session yesterday, but that sort of closed back up at where it opened really, so the highs of the previous session. And we're a bit undecided as well today on the price action. Obviously, it's very early in the session, and we're going by the futures prices at the moment. But while above this trend line, all looks pretty rosy for the Nasdaq. If it is to break this support level that we've got at 15,184, then it could spark a deeper correction down to these kind of areas around here. Looking at the S&P 500, the broader index in the US, we have seen this break of trend, which I think is quite important. We've got resistance formed at 4,487. If we remain below this, then there is potential for a corrective move down to this next swing low support level that we have at 4,350. And then below that, we have a number of support lines to potentially target. But if we get above this and can get back inside this longer term uptrend line, then the picture will continue to look quite healthy with regards to US indices, and we can again expect fresh all-time highs. Finally, on the Dow, that's hugging this support line at 34,564. While above that, there is scope for this continue to be quite range bound, I think, between these kind of levels. The upper end of that is at 35,613. If we do get a break lower, then we'll be targeting these swing lows from the 19th of July. And then below that, a band of support between 33,030 to 33,230. So keeping an eye on this level here. I think that's the critical level to keep an eye out for today and in the coming days as well. Okay, quickly rattle through those. We will be more in depth next week when Steve is back because we'll be able to check out more charts and pay a bit more attention to certain markets. But the gun to the head trades, it's really been a case of treading water on this. Another loss yesterday, unfortunately. I went long of gold expecting that support level to hold. It didn't. 6.5 ticks loss, 1R, so stopped out. So while Steve's been away, I've managed to be 2R offside. So hoping for a 2R win at least today to try and get myself back on track and have tread water in Steve's absence. So what do I fancy today? I've had no time to look at anything, so this really is on the fly. But if a gun were to be put to my head, where would I be looking to trade today? So I guess trying to look at where I'm going to get some volatility. We've got US consumer confidence, Michigan consumer confidence at 3 p.m. today. So that may factor into the thinking and may provoke some volatility. We've also got this triple witching situation where the futures and options expire, which can have an impact on US and European indices. So I think I'm going to concentrate my efforts here really in the US market. So Nasdaq I'm not going to touch because that's still above that trend line and looks pretty good. S&P 500, this are lines that I've had drawn on for the last couple of weeks or so. And without knowing, we've hit into this trend line today. So that could be a potential opportunity to have a go at a short, suggesting, really that we're going to stay within this corrective channel and that lower prices may be seen. So potentially something good on offer from a risk reward perspective. Let's have a look. Let's sell now at 4,477. Going to put a stop loss above this sequence of swing highs here, which is at 4,490, and I'm going to target a move down to these swing lows that are all important down at 4,434. So looking for just over 3R on that one today, which would be a nice one to get me back on track with the gun to the head challenge. So that is my gun to the head trade today. As I touched upon, day ahead, we have this US Michigan consumer confidence number at 3 p.m. Sentiment expected to rise to 70.3 from 70.2. Again, keep an eye out for that triple witching situation that will be occurring a little bit later in the day. Other than that, I think that's pretty much it from me. Looking forward to having Steve back next week, and we'll get some more in-depth look at some of these charts and some of these other markets, get his opinion on things as well. So pretty quick video today. Hopefully that was enjoyable. Hope you've had a good week. I'll be back next week with Steve, and until then, have a great weekend and trade safe, everybody. Goodbye.